Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, December the 13th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, on to the economic data. Across the pond, really not a whole lot to see. One thing I did note was that we got European industrial production came in at 0.2%, which is expected 0.2%. One thing to note was last month's number was revised down from 0.3% to a negative 0.6%. So actually a negative 0.3% to a negative 0.6%. So a revision down, not really what we want to be seeing. Back over here in the United States, we got consumer price index. Remember, we talked about this. This is the one that we talked about yesterday. But today, here in the United States, for Thursday, we got across the pond German final CPI, and that came in at 0.1%, and French final CPI came in line with expectations at negative 0.2%. Then we roll over here. We got, European has main refinancing rate unchanged as expected. And then we got importer prices came in at negative 1.6%, expected to be a negative 1%. Now remember, importer prices should probably be picking up a little bit with the tariffs because our prices of goods coming in are going to cost a little bit more. So that being said, we should see that number come up a little bit, and we aren't. So that's a good thing. And then unemployment claims came in at 206,000, expected to be 226,000. So less claims means that most people that are looking are finding their job. And finally, we got the natural gas storages coming in at negative 77 billion cubic feet, expected to be a negative 81 billion cubic feet. So less drawdown than expected should give us a little bit of uplift in at least natural gas. It's given a little bit of buoyancy to crude oil. They all kind of run tandem, right? That little buoyancy here, I don't know if it's really due to the fact that we're seeing less of a drawdown in natural gas, or if it's more along the lines of, we're still seeing inventory builds, and the economy is moving along nicely. So all of these things being said, this $50 a barrel area really feels right for me. Anything below this, it's just a little overdone to the downside, and up into the 70s, then it's way overdone to the upside. So I think that in these 50s is kind of like where our sweet spot is given the economy we're seeing right now. And then on to gold futures. They're giving up a little bit of ground today, but for the most part across the board, we're seeing all the markets pretty much unchanged and not real aggressive on either direction. It's really been a quiet day, to be quite honest. And then you can see that with gold futures, they are back below this Fibonacci, the 50 Fibonacci here, and I would expect it to roll back over to the 20 or 12.25 area. So only about $20 over where I look for that value. And then moving on, we got the VIX. I'm skipping over Bitcoin. It's really not doing anything today. VIX unchanged, really as quiet as the equities. I would expect to see a little bit more volatility coming out of this, but a lot of people are saying that the downside has not really been found yet. I'm on the other side of the camp where I believe we're going to continue to grind a little bit higher here. So let's look at the overall equities. We got the Dow Jones Industrial Average up about 50 points. Again, yesterday, unable to settle above this Fibonacci. We settled below it. I think that this Fibonacci extension, this 23 Fibonacci extension lining up with the point of control where the most time and volume has been spent isn't really going to act as a support and resistance like we would normally see with Fibonacci numbers. That is because it's lined up with the point of control where the most time and volume has been spent. That's where there's a comfort zone. So I think that we'll bounce above and below that. I don't know that it's actually acting as a support or a resistance. as much as just that point of control. You can see there's a lot of settlements in and around that that could suggest it, but just trading up and around that area is not going to be something that is very bizarre. So, it just isn't going to act as a strong support and resistance. That being said, very close to unchanged right now in the Dow Jones Industrial Average, as well as the rest of the equities. You can see the NASDAQ, albeit negative on the day, is very close. That can be made up in a matter of minutes. Yesterday, almost got below all of these Fibonacci areas. Just came up shy for the regular Fibonacci. It did settle above the Fibonacci extension. I would like to see it settle above both of these. And then again, my thesis intact with us trading back to the point of control and starting to settle down there. Similarly, with the mini S&Ps, didn't quite settle above that 23 Fibonacci extension. Would have liked to have seen that. Because, again, that would have held true with the thesis heading back towards the point of control. One thing to note is we do have these tweezer tops, and we did make a lower low, and this is getting a little bit vague here, a little bit choppy. I'd like to see some nice candles to the top, but late in the day we're seeing those sell-offs that is leading to a little bit more bearish undertones with me, and I'm looking to cover some of my long deltas because my overall portfolio is basically all long deltas. So I'm going to be mechanical and start covering these when I get to the 50% of max profit on these, so I can start thinning it out. I don't think we've gotten enough move to the upside to actually start adding in some short deltas yet. So I'm at the point of getting rid of some long deltas right now. Some of them are very close to my 50% max profit, or just ready to pull the ripcord on them. So I'm very diligent with keeping an eye on these. I'm on the night watch, if you will. So keeping an eye on all of that, because my thesis is that we're going to stay within these value areas, but any type of weakness or bad news, I'm going to be looking to pull a ripcord on a lot of this, because I don't have enough short deltas to really create that market neutral type scenario. So I'm looking for that opportunity. It's just not come up yet. So let's look at the bonds. I don't know why these are out of order, but the bonds with the equities doing what they're doing, getting a mixed bag there. Bonds are trying to discern the directional move here. It is being held up by this 200-day moving average, and it's going to be comfortable in and around this point of control. I think that this point of control is really a little bit high for the value that we should see for the bonds going forward. But that being said, it is where the most time and volume has been spent, and markets have a tendency to settle down around those areas. All right, looking at the E-mini S&Ps on the 30-minute chart, each candle is a 30-minute candle. Blue section is a day session. And as you can see, coming into the day session on the open, we got a nice big rally to the highs of the day, printed those highs within the day session, so it makes it legit. But then we've just seen the market really start to lose momentum, like we've seen the last few days. I don't like to see nice rallies early in the morning and then the market gets tired and slams down. That is not a good sign in my eyes for bullishness. It is a very big sign of bearishness to come when big selling comes in at the end of the day. It's a lot of times the weekends, as people do the MOCs and things of that nature, just get out towards the end of the day. So we could be seeing that, but that also leads to more bearishness going forward. Nice strong settlement today would be good. A weak settlement today is really going to have me on the night watch, getting ready to pull the ripcord on just about all my positions, to be quite honest. That's about where I'm at if we don't get a big move higher. All right, so one thing about Caterpillar, I just wanted to talk about this one because I am very close to 50% of my max profit on this one. I originally sold these puts in here in the Caterpillar. I did the 110 puts in there. Originally sold them for $1.89. Right now it's trading closer to 95, 96 cents. I'd like to get that down into the 80s. Is where I'm working an 85-cent bid, but I am looking to cover that by the end of today. So any opportunity to get it out of that, I'm going to try to do it for 50% of max profit or better. So Caterpillar is on the watch list to cover some of those deltas. Everything else I'm just leaving as is. I'm not adding anything more, albeit I'd love to add some with this high volatility, but I want a little bit higher move to get comfortable selling some of this stuff. That's it for today, other than I got a webinar later on the long call calendar. And we're going to be talking about the rules in and around this volatility coefficient, how it affects the long call calendar, and what we need to watch out for in order to keep our heads above water when trading this strategy, because you can set it up where it's not going to work out and you're not going to be happy. I'm going to teach you how to get in there and feel safe with this strategy. So check it out at protraderstrategies.com. If you can't take that, take it easy.